on the positive side of earnings. Meta absolutely blew out expectations. I mean, Meta up, I think I saw 12% the day after earnings,
Yep.
absolutely smashed it. Microsoft up 6 or 7. I forget where they landed. What was it that made people stand out or made these earnings stand out? Microsoft earnings, Azure for sure, but then we see Amazon had some weakness on AWS. So it's not that all cloud seems to be receiving the same treatment in the markets right now. And is the difference just GPT and Azure's exposure to that compute stack? Talk to us about what you saw.
Yeah, so let's kind of break this down because there's a lot going on. I think July 30th, when Meta and Microsoft both announced earnings at the same time, could be really remembered as a turning point. You know, we've had these inflection points since ChatGPT came out in late 2022. And last night was one of those nights that whatever your expectations were, and ours are very high on this show, they were surpassed. And it kind of shows a new wave that's going to happen in the AI market. So what did both these companies announce? They were earnings that are almost impossibly good. On Microsoft's side, it's acceleration in cloud revenue driven by AI demand. And on Meta side, it's more revenue to the business than anyone kind of thought possible. And they're kind of taking the next step in Austin. We talked about last week with what Zuckerberg's doing this all in. It is the next kind of step there and that all in kind of moment from Meta. So Microsoft, their earnings, let's look at them first. The headline figure, it's an absolute blowout for Azure, which is their cloud computing division. Wall Street was expecting 34% growth. They delivered 39% growth. They said that they could still grow faster. They just don't have enough capacity. And Austin, we're always talking about what are these companies going to be spending going forward? Microsoft, if you go back and listen to the show earlier this year, it was kind of the question mark. A lot of people thought they were going to decrease spending. They were canceling some contracts. Well, they're taking spending up to $120 billion run rate. That's $30 billion next quarter. Wall Street expectations head into this earnings report were $18 billion. So Austin, that just goes to our companies downstream. And let's just put this in context right now, because I've got the numbers for all the major cloud computing companies. When we started this podcast last August, the forward-looking expectations were that the cloud computing companies would spend $238 billion across the next year. That's revenue that flows to NVIDIA, Broadcom, the data center plays that we've bought for this portfolio. Well, where are we at now? Google just said they expect revenue this year to rise to $85 billion. Next year will be even higher. Microsoft, I just noted, a $120 billion run rate. Meta, which we'll get into, in their earnings gave, it's not guidance, but they intimated that next year they'll be spending more than $100 billion. Amazon is now a $120 billion run rate. Austin, we add all these up plus Oracle, that's over $450 billion. So the numbers are, since we started this podcast, the question was on Wall Street, will spending go down next year? The forward projections are now up 90%. So of course the companies that we're buying in this have much better prospects. And then we need to throw in other areas like CoreWeave and these smaller upstarts and this national spending. So, you know, Austin, that's what we saw from Microsoft is just the next acceleration in this cloud trend. I want to pause here. I'm going to get to Meta next, but I wanted to see if you had any follow-ups or questions from that.
Yeah, well, I just wanted to put some of this Azure growth into context and how impressive this acceleration is. 39% growth when in Q2 of 2023, Azure was growing at only 27%, which was a phenomenal number for a mature business. So we've picked up 12 percentage of growth, 12 points of growth percentage in just since Q2 of 23, appearing to be accelerating even further. And one of the things that I just keeps ringing in my head as we're talking about these numbers of, roughly $500 billion going into CapEx just from the hyperscalers here, approximately, is the infrastructure to support it. And this is where you've put part of the portfolio: interconnects, cooling, power delivery, power generation, all of that money. A huge percent of that money is going to go to chips. That's obvious. And you have a position in NVIDIA and Broadcom. But there's this whole universe of additional opportunities that is needed to support those chips, right? You need the data centers, you need the cooling, you need the power, you need the cabling. And those are small companies. When you're talking about 500 billion, relatively, when you're talking about $500 billion rolling through in the next 12 months, hitting those companies, we're looking at multiples of their top line growing.
Yeah, and the crazy thing is, so many of these companies were off 50% post DeepSeek, right? So they've now
Right.
basically recovered to these levels, but again, they've recovered to levels that they were in often in January, but expectations have gone up another 50%. So there continues to be opportunity.